Good morning and welcome everyone to the Moneycontrol live stream. You're watching the opening bell and I'm your host Nickey Mirchandani. Well, Indian equities may follow global cues and edge lower for second consecutive session today. SGX Nifty suggests a start near that 18,000 level, which is an important level of sorts. In terms of what happened overnight, Wall Street ended down on nagging uncertainty about the Fed rate path. Just to give a little color of what happened, Fed increased the interest rates by 0.25% as expected, but the caution set in as the new language failed to guarantee steady rates at its next meeting in June. While another US regional bank reported troubles overnight, thereby also highlighting the fragile state of overall Indian banking system. Asian stocks were mixed early in the morning after Fed played down the prospect for interest rate cuts. In terms of the Asian markets, they've been mixed, but Chinese shares whipsaw as they reopened a 3-day break today. FIIs, well, they have bought in shares worth around 1,338 crore, and DIIs, they have sold shares worth around 583 odd crore. In bunch of earnings that we'll be tracking this morning or today's session will be HDFC. The net interest income seen rising around 5%, and the net profitability, the quarterly, is expected to see a 4.4% growth to 3,854 crore as per Moneycontrol poll estimates. HDFC, Hero MotoCorp, Adani Enterprises, Dabur India, Tata Power, TVS Motor, IDFC, along with United Breweries. These are going to be some of the companies which will be reporting in their quarterly numbers today. But let us get going and discuss some stocks and strategies with Chandan Taparia, the head technical and derivative research at Motilal Oswal. Good morning there.
Chandan. Morning. Thanks for having me.
Oh, pleasure is all ours, Chandan. Chandan, what's your strategy right now? Fed has taken that rate hike, a little uncertainties off the market. We saw some amount of pause coming in for Nifty after 6 consecutive session of gains. You think it's reversal of trend of sorts, or the previous session was just a breather of sorts?
So I think some sort of breather or consolidative move could be there. As of now, the major support goes to 17,971, 18,000 marks. So I believe any decline towards those zones could be bought and can be utilized as a buying opportunity. So overall, the stance is positive to range bound after the recent run-up. So we'll continue to be with major trend and we'll utilize any dips as a buying opportunity with support of 17,971 and then expecting market to slow and steady head towards 18,181, 18,250 zone.
All right. Also, your word coming in on Bank Nifty and the strategy that you think the participants and the viewers should, probably undertake at this juncture, along with the important, crucial, support and resistance levels.
Yeah, so major trend of the Bank Nifty is also positive. We have seen a strong run up in last couple of weeks. The index is making higher tops, higher bottom on the weekly chart. It's just a few hundred points away from its lifetime high of 44,151. HDFC Bank and ICICI Bank are supporting well. So any decline towards 43,000 could be the buying opportunity. In that scenario, one can keep support of 42,750 to see the rally towards 43,750 and then higher zone in the banking index.
All right. Within the basket which has reported earnings, Chandan, something like a Cholamandalam Investment, that's one. Titan is the second. Godrej Properties is the third. There is a development coming in even for Reliance. So of these four, which look attractive, and your view separately on Reliance Industries right now?
Yeah, so first I'll talk about Chola Finance. The stock has really given a breakout from its Poland flag patterns above 855, 860 zone, and after that it is extending its momentum. We have seen better rollover with good rollover and open interest activity. So this is the one name where we should be keeping in mind with support of 870. The stock can move towards around 930, 940 level. When you talk about Reliance Industry, this stock has taken support, but momentum is missing. The good part is bottom formation already seen in the stock. In fact, in last couple of days, it was making higher base near to 2340 and 2355 level. So any dips towards 2400 will be buying opportunity with support of 2350, and slow steady we can head towards 2480 kind of marks in Reliance.
Okay, that's for Reliance. How about Cholamandalam Investment? Stock out there, what's your read out there? There's a double upgrade coming in. The reports, the numbers have been splendid. that have been coming, that have come in yesterday. But your assessment on the charts for this one?
Yeah, so as mentioned that we have positive view on this name, looking for fresh trigger 940, 950 zone could be the next level with support of 880 marks.
All right. Chandan, a little more longish view on your overall profitable stock ideas. 3 profitable stock ideas this morning.
So if I talk about the sector, positive view on the defense, tire and hotel. So BL will be one trade. We have seen rollover of 95%. Sector is performing well, making high tops, high bottom on the weekly chart. So it can head towards 112, 113 marks. Indian hotel and other hotel names are doing well. A stock has seen the rollover of 98%. Decisive breakout has seen above 350, and stock has entered into the new lifetime high territory. So with support of 347, one can see the momentum towards 375, 380 zone. So BL, Indian hotel, and then Apollo Tire will be the other name if someone is talking about tire segment because of the benefit of falling down price in the crude.
All right, so those are the views coming in from Chandan, but let's address the top movers of the day in bunch of stocks that we'll be talking about and addressing this morning. Of course, will include Titan, Godrej Properties, Cholamandalam Investment and Finance Company, and bunch of IT names are also expected to be in focus after the Cognizant earning as well as the guidance out there. But first with Cholamandalam Investment and Finance Company, well, the numbers are really good set of numbers. Net profit up by 24% for this one year-on-year basis. NII to a growth coming in to an extent of 31%. If you talk about the loan growth on YOY basis, it's the best that we have in almost 27 quarters for Cholamandalam Investment and Finance Companies. It's 8-quarter low GNPA and net NPA. These are the two numbers. They're at 8-quarter low. It's the highest ever quarterly operating profit for the company. So clearly good set of numbers. New business is robust. Cost to income ratio is the lowest in 5 quarters. In fact, one of the brokerages, that is JPMorgan, has given up a double upgrade for this one to overweight. The target price has been raised to 1,020. It says that the 4Q upfront has gone ahead and addressed the margin problems, with the company delivering on the margin expansion. It suggests that the company has reported a system-leading 38% year-on-year AUM growth, and the PAT is also 20% ahead of JPMorgan estimate. So that's the one that you need to keep an eye out in the entire session of trade out there. Also, Reliance Industries, do keep an eye out on this one. The company has got a shareholder along with the creditors, past resolution for the demerger of the financial services arm. Now, what Jefferies says, it expects the listing of Geo Financial Services by September 2023, and Macquarie, it suggests that Macquarie also has a similar view of sorts, and in fact, it has valued the financial services over 1.52 lakh crore and expects the company to become the 5th largest financial services firm in India. That's the word coming in from Macquarie out there. But Titan, keep an eye out on this one as well. It reported steady set of numbers yesterday. There was a mild miss coming in on account of margin front. But overall, if you talk about the revenue, that beat led by sales of gold ingots was around 1,055 odd crore. And if you talk about the margin piece, that came in on account of the eyewear business. The company paid in also 8 crore as a one-time recognition to the eyewear franchisors. That's where the miss came in from. So that's clearly one of the counters that you need to keep an eye out on, apart from HDFC, which will be reporting in the numbers today. But remains to be seen how markets behave this morning. It will be important to see if Nifty will hold on to that 18,000 level, or will it just give away that 18,000 mark in today's session, in line with how the global pairs have been performing thus far. So we're tracking how the market has been stacking up for you at this point of time. If you look at the market opening right now, we are we're seeing some amount of caution building in on that one. Probably we need to see how the market is behaving happening. We are seeing some amount of losses coming in for Nifty 50 right now. Well, it's actually a flat start, beg your pardon. It's a flat start with negative bias. 18,000 mark has been held on to, but remains to be seen if the selling pressure actually accentuates during the day, and 18,000 mark is an important support level for the markets. If that's taken off, you could see some amount of selling pressure creeping off in the entire market. Let's talk about Bank Nifty index out there for you. Bank Nifty 2 has been trading flat opening with negative bias building in for Bank Nifty index overall. Talk about the other sectoral indices that we have on our charts right now. Nifty IT, well, Cognizant has come out with earnings as well as guidance out there. We're just going to be addressing that in a jiffy for you. But right now, flat opening with positive bias coming in for Nifty 50 index right now. Talk about auto index. That basket is holding up in green with gains of around 0.2% out there. In terms of the other sectoral indices, something like a metal basket shining and bright, more than 0.5% of gains coming in for metal counter. In terms of the other sectoral indices that we have, pharma, well, you have the entire defensive playing up in the morning. Auto is also doing well. Pharma doing well, IT doing well. Let's look at FMCG to see the slender amount of gains that FMCG is probably sitting. It's a flat, no matter what, it's a flat opening coming in across sectoral indices also. Talk about FMCG, talk about IT, talk about pharma. It's just with some amount of positive bias, but you can clearly see that amount of caution building in for the markets with an important event now being out of the way. Fed has taken that 25 basis rate hike, but it's downplayed the probability of another, rate cut probably coming in, something that the market was really looking at. And in tune with that, you're seeing Realty Index also not doing too well, probably down and out. So that's that in terms of the market open. But also let's address the top gainers and the top losers that we have on our list, beg your pardon, right now. In terms of the market breadth, 31 advances versus 19 declines out there. Adani Enterprises, Eicher Motors and Britannia, which will be reporting in the numbers tomorrow, expected to be in focus. In terms of the other top gainers that we have on our list right now, let's look at Hero MotoCorp, which has done well. It's expected to come up and report numbers today. The shining and bright in morning, right ahead of the numbers, Adani Ports and TCS. These are some of the other top gainers that we have overall on the list. L&T, Axis Bank and GSW Steel. Well, these are some of the top gainers that we have. In terms of the top losers in the list out there, ONGC, TRL, HCL Tech. These are the top losers on the list right now. And Power Grid, Bharti Airtel and Tata Consumer Products. These are some of the other numbers or the other companies that are top losers right now. ICICI Bank along with Coal India and Kotak Mahindra Bank. So it is entirely dragged by the financials out there on the list, along with some of the IT names too showing up. Auto seem to be holding well. Eicher Motors, Hero MotoCorp. These are some of the names which are shining in bright as the top gainers on the list out there. But overall, financials, there's a drag coming in on the financials out there. Cognizant has reported in numbers, right? You're seeing that IT basket having a mixed flavor right now, given how the mid-cap IT has performed, given how the large-cap ITs have performed. Well, in terms of what Cognizant has done, revenue, that's down by 0.3%. Constant currency revenue, there's a growth of 1.5% year-on-year basis. Operating margins have come in at 14.6% versus 15% year-on-year basis. And there is some amount of expansion even in terms of sequential growth, 14.6% versus 14.2%. So overall bookings have also risen 28% year-on-year basis. And if you talk about the guidance, they expect that to return. They expect to return around $1.4 billion to the shareholders via share repurchases and the dividend out there. They expect the revenue growth guidance to be around that 1.2% to 0.8% in CC terms overall. And in CC terms, they expect 1% to 1.1%. That's the number coming in. So Cognizant has clearly given a fairly okayish, decent set of guidance out there. And if you talk about the performance right now, the Nifty IT index, that's actually down and out for you with losses of around 0.1% out there. The trend right now has been mixed. So that's the word coming in for the IT sector overall. We are seeing flattish amount of, momentum building in for the market right now. And if you look at Reliance Industries, that's where the financial, Geo Services demerger has happened, which is expected to be listed by September. Well, that's typically it's pretty much flat at this point of time. A bit of negative which is coming from Cognizant, they said that the revenue will decline overall in 2023 and they're going to be laying off 3,500 employees. So they'll also give up 11 million square feet in the office space. Overall, we aren't really looking at numbers which to an extent are underscoring the pain in the IT service industry, which derives majority of its revenue from the US. And the term when they say that they're going to be laying off 3,500 and give up million of square feet in office space just to save cost also speaks volume about the space not really doing too well. So that's the commentary which is, and the guidance which probably hasn't really augured well in terms of the overall picture that the company has painted for the entire IT basket right now. You're seeing some amount of negative bias creeping in for IT sector right now. Some amount of losses have recouped, but right now it is a flattish bias with, flattish tone with negative bias coming in for IT sector right now. But Chandan, come in on this one. Cognizant has provided a revenue guidance out there. It speaks about the layoffs. It speaks about giving up the office space just to save on to the cost. What do you make out of the IT counters? Does anything attract you at this point of time?
So if you look at the IT name, we have seen some sort of underperformance in last couple of days, especially when you talk about heavyweights name like TCS, Infosys, most of them stuck in a range. However, bottom has formed. So if you ask me to select one pick, then I'll go with TCS with the view that downside is there, margin of safety could be there. However, one need to understand that momentum is missing. But yes, we are getting at the lower price and the stock is consolidating. So I think with support of 3,100, slow and steady, we can see a move towards 30 to 70 kind of level. Persistence will be the other name. I think any dip towards 4,600 could be bought or target towards 4,900 level.
All right. So Persistent and TCS are the two counters that Chandan has given its view on. To bear in mind, at 14.6%, Cognizant margins are amongst the lowest that we have in the IT industry, comparable to something like a Tech Mahindra. Chandan, I would also want to understand your view coming in on HDFC, because that's going to be coming in with numbers today, and it's a big one that we're expecting. So what do you make out of it? There are going to be few of things that we're going to be looking at in terms of the key factors to watch out for. But before I address that, your view just overall on the, the charts right now for HDFC.
So HDFC Limited and Bank has seen the positive price action. In fact, the supports are intact. They just require a small trigger and follow up. I think if market has to lead the next move, then HDFC Twins will do the needful thing here. So if I talk about HDFC Limited, the stock has been moving in a range, but supports are gradually shifting higher. Right now, it's quoting near to 2,800. One can look for buying with support of 2,750 for target towards 2,900. Even HDFC Bank is also commanding well. So it has taken multiple support near to 1,650. But at the same time, call writing is there at 1,700. Let it hold about 1,700. It will open the move for 3 to 5% on the upside. So I think HDFC Limited and HDFC Bank are positioned well. And positive trigger in the same could cheer both the indices and taking the Bank Nifty to the new lifetime high territory as well.
All right, so that's clearly the view coming in for HDFC as well as HDFC Bank. It's HDFC which will be reporting in the numbers. But Chandan, thank you so much for taking out the time and speaking to us this morning. All right, then let's address the fundamental side of the story. There is enough and more to be said and spoken about the IT, about the FMCG basket overall, about the banking sector. And to take the discussion forward, we've been joined by Mayuresh Joshi, the head research of William O'Neill Company. Good morning there, Mayuresh.
Morning, Nickey. Pleasure to be on your show.
Well, pleasure is all mine, but I'm going to start off by asking you, what are you picking up in the markets right now? HDFC is going to be reporting in numbers today. You have Cholamandalam Investment, which has reported a solid set of numbers, and there is a double upgrade coming in from JPMorgan on account of that. Two different sectors altogether. One is NBFC, and of course, we are also talking about HDFC. What do you make out of it, and what's your assessment overall?
So to a large extent, I think the delivery of numbers by Chola has been extremely strong. So I think the note that they put out before the earnings release and what they have delivered, I think it's still a stronger set, whether it's the AUM growth, the advances growth that you're probably looking at, the collection efficiencies, and the moderation that you probably witnessed in the asset quality pressures as well. So if you summarize all these elements and put them together, I think the kind of performance that has got exhibited has been very, very resilient. The kind of sources that they've got for borrowings, including bank borrowings, I think we've hit the peak rates in terms of rate increases. And to that extent, I think the borrowing mix for quality NBFCs like Chola do hold out. So anybody holding out Cholamandalam Investment and Finance, I think, should continue holding that. For HDFC, expectations of a very stable set of numbers, Nickey, as always. Asset quality expected to be very, very stable. The spreads are expected to be stable as always. And therefore, I think the kind of valuation premium that they derive probably is exhibited in the price as well. Obviously, I think the merger synergies with the bank is expected to start getting operationalized in the next few quarters. And therefore, I think it's one quality portfolio stock that one should just hold and keep it for keeps. Even after the merger, my own sense is that it's a quality behemoth at the end of the day, a leadership stock that we at O'Neill always like. I think it's a buy and it's kind of an old, it's kind of a old stock where it's probably just keep it and forget about it.
Sure. Mayuresh, your word coming in on the IT sector. Cognizant has decided to lay off 3,500 employees, give up some of the space. The margins are the lowest in the IT industry. It really underscores the underlying pain of the IT sector, especially in the US, and the exposure thereof. What do you make out of the space? Do you think most of the negatives are now factored in? A bunch of the companies have already reported that the numbers, and we've decoded that numbers enough and more in details. But at this point of time, do you think they're attractive options and the valuations look attractive to you?
I think most of the stocks have broken out quite significantly, both in terms of price action and even in terms of the valuation stack up. A lot of the mid-cap IT names which have performed exceedingly well, Nickey, I think stocks like a Persistent, Mastech, KPI Tech, LT High, Mindtree, I think all of these companies gave stellar set of numbers. And therefore, I think both from a price and a valuation stack-up perspective, a little bit on the higher side in terms of standard deviation, mean and averages over the past 5 to 10 years. And therefore, some element of cooling off is required in terms of fresh entries, specifically in this space. Large cap IT has got battered. I think specifically after the Infosys number, what you've probably seen even for TCS with a very, very high base, TechM's commentary was very, very soft, and so was commentary. So I think mid-cap has clearly outperformed, but for these specific reasons, one should wait for significant pullbacks to start having fresh entries on discounters. The second element, obviously, for the sector as a whole, with the entire regional bank mess in the US, and where the BFSI contributes anywhere between 30 and 50% in terms of revenue contribution for most IT companies, if that goes into some element of an apparent slowdown, and a significant one at that, order slowdowns will be very, very apparent from the second quarter of this financial year. In fact, in the first quarter will be very, very important for these companies as a whole. And therefore, I think how the results play out, how the macro conditions play out, specifically in the US, you're still looking at rate increases in the European zone, because the core inflation still remains extremely sticky out there, is going to probably a drag on the order flows. And therefore, I think margins, even if they have been sustaining because of attrition issues largely behind the sector as a whole, I think fresh order wins will probably weigh in terms of the sector as well. So I think my mantra is, I think, wait for pullbacks within the mid-cap IT space. It's got a little bit too heated at this point of time, and there are some concerns as far as the banking sector is concerned, specifically the regional banks in the US. and inflationary macro concerns in the Eurozone.
I completely agree and take this on board. There have been a couple of sure, attrition would be behind us. That's also hinting at the potential slowdown that has come in overall in terms of the sector, So that's not really a solace point out there. Even if you talk about the entire fear is just intact within the space, and mid-cap space right now, as I don't know, we've been speaking this enough and more, remains to be more vulnerable. But in today's session, SBI Life, HDFC Life, these are some of the top gainers that we have overall. The earnings have been out for one of this, if I remember. But what do you make out of the space right now? And do these counters look attractive at the given valuation?
So again, classical setup for life insurance players, Nickey. If you look at SBI Life, Max, ICICI, and HDFC Life, I think the quarter gone by, I think with the new tax regulations and rules creeping in for this financial year starting April 1, and with a lot of tax incentive schemes that a lot of investors probably look at the end of the previous financial year, you'd seen significant amount of inflows happening into the sector. Now, with the changes that have happened and the tweaks that have probably happened, both in terms of the product taxability and the overall taxability exceeding 5 lakhs, clearly, I think companies like HDFC, ICICI, which have gone on record saying that they will take a hit in terms of top line and bottom line as well, anywhere between 10 to 15% will obviously have a say in terms of the earnings growth. The second element in terms of the new tax regime that probably kicks in, and when a lot of people probably opt out for that, there is no apparent need for having forced or compulsive savings through life insurance products. So I think what happens in terms of the new business premium growth for this particular segment, which is pretty large, by the way, is going to be extremely critical to observe and see and monitor as well. The third element in terms of a lot of these operational costs, specifically for HDFC Life, ICICI too, including commissions and expense ratios, still are quite significant. So if I stack up all these elements in terms of the product mix, how much of percentages in protection, non-participating products, in terms of the overall compensation, including the commission and expense ratios, and the bank assurance and the distribution tie-up, probably SBI Life stays on top of the stack at this point.
So SBI Life stays on top of the stack for Mayuresh at this point of time. But Mayuresh, one quick question that we have overall, something like a Reliance Industries, also your view coming in on that one. There's a demerger which is coming through, and the Jio Financial Services is expected to be listed by September. Thus far, we haven't really seen significant participation coming in from Reliance. But overall, the earnings have been really steady set of numbers. What do you make out of it?
Oh, absolutely. In fact, the oil and gas segment outperformed this time round as well. Retail has seen significant strides, both in terms of the retail space that they are probably adding on, and expectations in terms of the margin performance as well. My own expectations in terms of the telecom part of the business, Jio should have some elements of rate increases along with Airtel in the coming few months. Might be expensive for our pockets, but it's still comparatively cheaper than anywhere in the globe at this point of time. So with ARPU increases, I think the kind of stability that one really expects for this part of the business, including the 5G capex rollout spends that are probably happening, is very encouraging. And the best part of the press release, Nickey, was even with all the investments that are probably going into green hydrogen and the new projects thereof, the management still believes that net debt to EBITDA should not exceed 1 or 1.25 times, which allays a lot of concerns in terms of the burgeoning debt on their books. So yeah, I think it's been a steady show. Singapore GRMs, as we speak, have corrected over the past couple of weeks. So to that extent, how this is a key monitorable for the oil and gas and the petchem space needs to be seen. But Reliance obviously has multiple feedstock options at its BS, which probably allays a lot of concerns in terms of how a lot of companies get hit on their core margins. Reliance probably stands a little bit better off. But this remains the only key risk on the oil and gas petchem space on how the GRM should probably play out. But overall, I think it's a solid play, both in terms of retail and oil and gas expected.
All right, Mayuresh, there is always a price we pay when it comes to the premium. When it comes to the steady state of business out there, and probably Reliance is no different, but disclosures out there, we'll be owned by the company as such. But yes, we would also like to talk about the Fed rate hikes which have come through. That takes a major chunk of uncertainty behind now. markets can probably freely move with what has happened, and probably what disappointed is really that there was this downplaying of the entire rate cut, and there's a little uncertainty if they're going to go ahead again with the trajectory. What do you make out of it? And with the stance, which are the sectors now you think can do better?
So to a large extent, as far as the Fed statements are concerned, I mean, I was not surprised. I think inflation has to come down before rate cuts start happening. Otherwise, you're in that burgeoning cycle of that classical cyclical cycle of demand supply. So, but to a large extent, I think markets will gestate that. But you're absolutely right. A large part of the rate hikes behind us. In our domestic context as well, I think the rate hikes are largely now behind us. Now, as inflation starts cooling off, and we come near that 4% trajectory even in our own context as far as the Indian CPI basket is concerned, rate cuts will start coming through. The only headwind that the markets will now probably look at is how long will these rates persist? Higher for longer will probably mean an overhang for the market itself, but they do take that in their stride as well. And to a large extent, I think the inflation trajectory will start coming off quite significantly, and therefore growth will be given impetus over the next few months and next few quarters. Having said that, with our own government infrastructure spending, the general elections around the corner in the next 3 to 4 quarters, infrastructure, capital goods still remain in a very, very sweet spot. BFSI selectively, with the kind of run that we probably see right now, still remains in a sweet spot at this juncture. And a few of the broader market areas like utilities, power utilities to be more specific, a few PSU entities, and a few of the indirect infra players, including cement, including pipe companies as well, probably look very, very attractive. So I think this is what is probably coming out on our sectoral graph as far as the O'Neill lenses.
All right, Mayuresh, we'll leave it at that. Thank you so much for taking out the time. But a bit of market check out there for our viewers. Nifty is trading in green right now with gains of around 0.1%. 18,100 mark has been taken up. So that's the development coming in. But with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. Please do post your feedback for us in the comment section below. Follow us on the link at the bottom of your screen. And for rest of the updates, stay tuned into moneycontrol.com and Moneycontrol app.